Today, we're going to break down how technology is completely changing the game for venture capital, taking it from a world of closed-door networks to one that's powered by some seriously smart algorithms. So how on earth did an industry built on handshakes and gut feelings start teaming up with artificial intelligence? It's a fantastic question. And to answer it, we're going to have to take a journey through the last 80 years of investing to see how things went from slow to all of a sudden. You can actually map this whole transformation across 5 pretty distinct phases. We're going to walk through each one, and we'll start in a time that honestly feels like a totally different planet compared to the VC world we know today.
All right, first up, the old world. For a really, really long time, we're talking most of a century, the name of the game was simple. It was all about who you knew.
I mean, for more than 60 years, access was literally everything. You've heard that saying, your network is your net worth? Well, that was the absolute gospel truth here. There was basically no data to speak of. So every decision came down to instinct, gut feeling, and yeah, a whole lot of personal bias. No warm intro, good luck even getting a meeting.
Okay, so that closed-off world of exclusive networks, it was about to get completely blown apart. See, the internet didn't just change how we talk to each other, it fundamentally changed the flow of information itself. And for VC, it was like a tidal wave was about to hit the shore.
And just like that, all this information that used to be locked away in dusty file cabinets or someone's private Rolodex was just out there for anyone with an internet connection to see. We're talking company registries, who got funding, people's entire career histories. It was all online.
And this explosion of data, of course, led to the rise of these huge new data sources. Things like professional networks, web scraping tools, and massive commercial databases. For the first time ever, investors could actually look beyond their own little black book. They could systematically hunt for deals and talent on a massive scale.
But, and this is a big but, this created a whole new kind of problem: information overload. I mean, it's great to have all this data, right? But there's no way a single person or even a team could possibly sift through it all. It's like they were drowning in digital information, drowning in opportunity with no way to find the real gems.
So what do you do when you're drowning in data? Well, a new breed of investor started to pop up, and their thinking was pretty simple. If you can't beat the machine, you'd better build a better one.
Now, you might be thinking, hold on, aren't all VCs data-driven? I mean, they all look at spreadsheets and metrics, right? And yeah, to a point, but when we talk about a data-driven VC or a DDVC, we're talking about something fundamentally different, a whole new strategy.
See, a DDVC isn't just a firm that uses data. It's a firm that builds its own internal systems, its own engine really, to collect, score, and analyze the entire universe of opportunities. It's not just about looking at the deals that come to you, it's about building a machine to see everything.
And this slide, this really nails the core difference. Think of it like this. A traditional VC is optimizing for the local maximum. They're trying to find the best deal within their own network, the best thing they can see. But a DDVC, they're optimizing for the global maximum. They're trying to find the absolute best opportunity that exists anywhere in the world.
Okay, so we've got this incredible data foundation built by the DVCs. And then, late 2022 happens. ChatGPT is released to the public, and it kicks off the era we're in right now, the age of the Augmented VC.
What this means is that investors now have AI copilots. These assistants can handle so much of the manual grunt work across the entire process. We're talking about AI that can identify promising companies, enrich the data, help with analysis, and even draft the first version of an investment memo.
And this is the really critical point. This is not about replacing humans. The human investor is still very much in the driver's seat. It's about augmenting their abilities, supercharging them by taking all the boring, repetitive stuff off their plate. That frees them up to focus on what humans do best: strategy, building relationships, and making those really nuanced calls an algorithm just can't. Which, of course, leads to the big, looming question. If the AI is getting this good, what happens if you just take the human out of the loop completely?
And here's where it gets really interesting. You'd think with all the AI hype, everyone would be betting on a fully automated future, right? But look at this data. The belief in a Quant VC, a fully algorithmic investor, has actually dropped by half in just a year. It feels like the industry got a bit of a reality check and realized the limitations of today's AI.
So the general thinking now is, yeah, an AI probably can't be a lead investor. It can't run a whole complex deal by itself. But we are starting to see the first examples of AI as a follower investor. These are quant funds that are programmed to algorithmically follow other investors they trust, automatically writing smaller checks based on those signals. Pretty cool. Okay, so we've talked about AI copilots, quant funds. It's easy to think that every VC firm out there is already a high-tech machine. But let's get a little reality check on where the industry actually is today. 99%. Let that sink in. That's how many investment firms are still at the very, very beginning of this whole tech and data journey. For all the talk and all the buzz, the vast majority of firms are still stuck in the past.
So what does this mean for you? It means this isn't some trend that's already come and gone. The shift to a data-driven, augmented model is the key strategic challenge and, honestly, the single biggest opportunity for the entire industry over the next decade. It's an evolution, not a revolution that happened overnight. There's still time to adapt.
And that really leaves us with one final big question to chew on. As AI gets better and better at handling the what companies are out there, what the market data says, the real value, the irreplaceable skill of a human investor is going to be all about the why. That uniquely human stuff, the deep conviction, the mentorship, the relationship building. That's the stuff that AI can't touch.